Hello, and welcome to the Fintech Times Podcast, focused on discussing the latest fintech topics and trends from around the world. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report all the latest and brightest ideas from the fintech world.
Today we're going to be talking about co-opetition between banks and fintechs. So firstly, I'd like to say hello to our online audience. Thank you so much for joining us today as we explore this idea of co-opetition between banks and fintechs. So you can follow along the conversation on Twitter using the hashtag Fintech Times Co-opetition, or you can follow us at the Fintech Times. So as fintechs and the many challenges to the finance industry have continued to evolve into a league of their own, a new buzzword has cropped up in the industry over the last couple of years, which is co-opetition, a portmanteau of cooperation and competition. And this seems to be the latest trend in the industry, where challengers team up with the incumbent financial institutions to create new products, services, and solutions for the fintech world. So we have some fantastic guests for today's discussion, and I'm delighted to welcome on screen Julia McColl, Chief Product Officer from Chetwood Financial, Jovi Overo, Managing Director of BaaS at Unlimint, and Dr. Amber Ghaddar, co-founder of AllianceBlock. Thank you so much all for joining me today. And I'd love to start by just having each of you give us a short introduction to both yourself and your companies. So Julia, why don't you go first?
Great, thanks, Polly. So I'm Julia, as you said, Chief Product Officer at Chetwood Financial. I actually joined back at the beginning, so back in 2016 as we were starting the business. I like to joke that we were literally just a PowerPoint presentation at that stage, but it actually is true, we were. So since then, Chetwood has gone from 5 or so people to 250. We've raised £150 million of investment. We've launched 4 consumer brands out to market. So LiveLend, Better Borrow, Smart Save, and Wave. And really, we've just launched our banking as a service proposition in the last 12 months or so. So lots happening. So hopefully that gives you a little bit about me and Chetwood.
Perfect. Thank you so much, Julia. Jovi, why don't you go next?
Thank you. So Jovi Overo, or as my friends either want to call me, John Bon Jovi, or the Don Draper of FinTech. No, I think I only call myself that. But anyway, yeah, so I'm the Managing Director of Banking as a Service at Unlimint. We were founded in 2009, and we essentially are a global tech company that helps businesses make and receive payments. And that can be done obviously via acquiring, it can be done via corporate accounts, it can be done via card issuing, and it's going to be done via the new product that I'm looking to roll out this quarter, which is our banking as a service solution. I've been in fintech for the last seven to 10 years. It's something that I am very passionate about, and looking forward to this webinar. Thank you.
Perfect. Thank you so much, Jovi. And last but not least, Amber, why don't you give us a bit of an intro?
Well, I'm Amber. Thank you for having me. I'm co-founder and CIO at AllianceBlock. AllianceBlock is a blockchain startup that bridges traditional finance with decentralized finance. I think one of the flagship products is our focus on compliance and regulation. We have a product called Trustless KYC AML, which should allow institutional investors to start investing in DeFi, and another product called Cross-Border Regulation Protocol, which translates most of the rules across jurisdiction into a based rule protocol. My background is in traditional finance. I was at JP Morgan for 6-7 years in structured solutions, systematic strategies, and trading.
Fantastic. Thank you so much, Amber. And thank you all three of you for joining me today. I'm really excited about this conversation because I feel like it's going to be quite an interesting one. I mean, personally, the first time I heard the word co-opetition was at FinTech Week London last year. And I feel like since then, it's just been really building and building and building to this actual idea within the industry. So I guess, why don't we just sort of start off by looking for like what has prompted partnerships between banks and FinTech challengers? What is the scenario here? So Julia, I'm going to ask you that one first.
Great. I mean, I think some of it is the obvious things, isn't it? So some of it is, speed to market, I guess a desire to kind of test and learn. So how do you get things out to market, perhaps in, with less commitment from a full investment perspective? So can you partner to do that? I think is quite appealing actually for lots of companies. And I guess I've been thinking about it in terms of where are those real points of competition. And I think some of the partnerships actually have evolved from companies thinking a little bit differently about that and starting to realize that they can use and consume services from others that actually allow them to deliver better outcomes for their customers. And actually that by working with someone who is, perhaps traditionally would have been seen as a direct competitor, they're able to do that, as I say, much quicker, to innovate, to be more kind of at the forefront of testing something that's perhaps a little less traditional and a little less easy for them to deliver in their own organization. So I think it opens up a lot of those. And I guess the driver for that is both customer and commercial, right, in terms of business performance goals, objectives, but also trying to really offer things that are different out in the market.
Yeah, that's really interesting. Jovi, did you want to add anything onto that?
Indeed. I think like I've only recently heard about that, co-opetition word. It sounds weird to me, but what has prompted this? I do think that, banks, essentially because of the way they build their systems and because of the regulations being put on top of them, they move at a much slower pace than fintechs, right? Banks spend millions of dollars essentially in my opinion, to stand still. The top 100 banks, according to a study by Accenture Research on S&P Capital, the top 100 banks spent more than $1 trillion on digital transformation in the past 3 years. But for the majority of those, that has not led to any discernible revenue growth. Now, for a relatively large incumbent bank, each dollar spent on new technology essentially means $9 doing the back-end tie-in on the old tech. Now, for fintechs, simply they understand that they either need access to a critical number of customers and/or they need, the bank's infrastructure. So I agree. These, for me, in my opinion, are a few of the many reasons that has prompted this partnership, essentially.
And then Amber, coming to you next. What do you think on this one?
I agree with both my colleagues, and I would add that banks are all behemoths that are entangled with very restrictive regulations and very old and clunky processes, while fintechs are very agile, very nimble, can go to market very quickly. Now, the interesting thing that we're seeing across banks, I would say for the past 5, 6, 7 years now, that the winds of change are blowing. And actually, each bank now has an innovation team. Each bank is talking about digital transformation. And I would give an example that I have lived myself, that saw the change, the mentality change within banks. I recall when I started my career, the focus was on compliance. So suddenly it wasn't the people who had the power were not the traders anymore, but it was the compliance officer and the legal officers. And throughout my career, I started seeing more and more IT people being hired and a big focus being put on IT. Justly so, because if you think about these old behemoths, as I call them, most of them are built up on acquisitions. And when they acquire other banks, they have a very ugly system sitting on top of another. So you would use 2 different systems or 2 different protocols to do one single thing. But because fintech has grown so massively, banks know that their only choice, is to adapt or die. And we have seen that in the news outlet industry, in the news outlet industry, when we started having a lot of bloggers coming in, a lot of freelance journalists, you saw news outlet badly adapting and losing a lot of market shares. Now, the good thing is that banks, as Jovi has mentioned, bank have money, bank have people, and bank have experience, which is something that fintech do not have. And collaboration in this space make a lot of sense. And I would add to this, I was not aware of this expression, co-opetition, but I would add to this, in the crypto space, it is something that is very common. Everyone collaborates with everyone. We don't consider one another competition, but we consider one another partners, because we can leverage on the user base, we can leverage on the protocol, and we can leverage on the experience of others.
about the crypto industry. I didn't know that it was so heavy on collaboration. I think that quite leads nicely onto sort of my next question is who's benefiting here? Is it the fintechs or is it the banks or is it both, I guess? Jovi, why don't you go for that one first?
Who is benefiting? I think it's going to be a combination of the two, right? Essentially. Banks, for whatever reason, just simply cannot move quickly enough, I think. And therefore, by gaining access, to fintechs and their agility and their speed of pace and the speed of change, that to me is a main benefit, that banks get. And again, simply put, from a fintech perspective, access to that size, access to that capital, access, to that infrastructure, which essentially means that banks get a benefit from this, fintechs get a benefit from that, and ultimately consumers, I think, also get the end benefits, in my opinion.
Fantastic. Then Amber, sort of same question to you. Who is it that's benefiting the most here?
I would say the users. So if you look at data, so I just want to talk about data a little bit first, so you can understand the state of the industry. If you look at the data would tell you that the user base aged between 18 and 34 is the one that is growing most in digital banks and growing very little in traditional banks. But at the same time, the way you look at it is that there is a lot of a joint collaboration between the two. Why? Because 25% of users of digital banks interact with traditional banks, while less than 5% of digital banks users interact with traditional banks. So you still have a big opportunity for digital banks to grow on the user base of traditional banks. And also in terms of product or in terms of users, bank users are very sticky. Meaning that it is very hard for you to cancel your account, your Barclays accounts or your HSBC account. So what you would end up doing is having one main account at Barclays and then a secondary account with Revolut that you would mainly use for day-to-day transaction and that you would use for international travels. So what did this do to traditional banks? When Barclays started seeing, I'm just giving Barclays as an example, when Barclays started seeing the additive products that Revolut was offering, such as managing your accounts, being linked to other startups, doing automatic payrolls and the rest, Barclays started doing the same through its app for its traditional user base. So in the end, it is the user that benefits. And one thing I forgot, it's with relation to fees. As you all know, digital banks' fees are much, much smaller than traditional banks' fee, which has pushed traditional banks to actually decrease the monthly fees on their traditional banking accounts.
Absolutely. And then Julia, obviously Chetwood being a digital bank yourselves, I'm really interested to hear your opinion on this. Who's benefiting here?
Yeah, and I think for me, from a customer perspective, and it is our business model, it is our strategy, but there's a lot of overlap here around identifying those segments in the market that are underserved. And so at Chetwood, that's what we do. We look at target markets where we think we can essentially do a better job for those customers. And I think the great thing here is that actually we know there are tons of customers out there who are still underserved by the market. And so actually by combining and creating partnerships, we can hopefully create more innovative products. We can look at better customer journeys and actually start to serve some of those groups that traditional banks don't necessarily reach in the same way. So for me, it's about, better customer outcomes from a kind of risk perspective. But also hopefully more innovation and kind of really delighting customers with different products too.
Yeah, absolutely. And that sort of leads on to my next question, which is something we've kind of already covered slightly, but how is co-opetition positive for the industry? What is the collaboration doing for fintech and finance in general? Amber, I'm going to ask you that one first.
Well, I would say because banks I think there's only 5 Main Street banks in the UK. So they have a monopoly on the business. When you have a monopoly, you're not really tempted by innovation. You're not really tempted by changing things because things are working very well. The fact that you started having these fintech coming out has actually been the push that banks needed to start thinking about digital transformation and start thinking about innovation. I would say I'm 100%, 99.9% sure that if we haven't had the emergence of digital banks in the retail sector, we would not have seen banks, traditional banks, creating these very easy to use apps. And even more so, I would start talking about investment banks. So what digital banks have done to retail banks, I would say other fintechs and blockchain are doing to investment banks. So investment banks now are sitting, looking, saying that, you know what, we might lose market share here. So let's start building teams, and let's start having blockchain teams, and let's start interacting with these blockchain companies and try to understand how we can integrate this to our framework and to our business model.
Fantastic. And Julia, I saw you nodding along to a lot of what Amber was saying. What do you think on this?
Yeah, not much to build on, really. I think, I agree with all of that 100%. And I think, I guess I was reflecting as you were talking on, it is not just in banking either, is it? And I think we've seen some really great examples actually of, different digital businesses leading the way on customer experience, on product design, on innovation again. And actually, I think lots of industries are also benefiting from looking to new partners coming in and new providers to help inspire them as well. So I was just thinking it's happening everywhere, I think. And I think those new entrants are really driving that space and really encouraging others to kind of up their game. I think in banking, one of the things I reflect on, having been in the industry a while, is we sort of had an interesting move from banking to customer, and lots of the big banks started to talk about customer properly probably 10, 15 years ago. But I think actually we're still seeing that trend progress, and we're seeing that people are starting to do more around customer research. I mean, it's something that, Polly, I'm pretty obsessed with. We literally test everything at Chetwood. It's kind of core to what we do. But I think we have seen again that some of the newer businesses coming in have really started to drive the more traditional organizations into that space, because they can see the benefits of actually building products alongside their consumers. I think it's starting to change the industry from within, actually.
Yeah, absolutely. And I know that's something me and you have talked about before, Julia, just sort of really focusing on the consumer and, the consumer benefits from this entire situation, I think are obvious here. But Jovi, bringing it to you then, what do you think?
I think everything that needs to be said has been said, and I agree. I would say, however, disagree slightly in terms of it's been positive, but we still need to see an increase in the pace of innovation, right? You can look at all the incumbent banks. So, for example, I've got a NatWest account, and I love NatWest, and I'll never leave them. I got them when I was a student many moons ago, and it was all because a nice customer services lady was very kind to me as a poor, starving student. And for that reason alone, I'll never leave NatWest. But if I look at my NatWest banking app, essentially, all they do is pretty much copy everything else from the neobanks, right? I will see it come up on Monzo, and then maybe 3 months later, it will pop up on my NatWest banking app. So yes, it's been positive, but I think that the incumbent banks need to increase the pace of innovation, number one. And also for the challenger banks. So again, I've been in the industry. I have, I think, 15 accounts, Monzo, Revolut, Starling, etc. And again, nothing fundamentally differs from one to the other, okay? It's all a slight iteration on something that's already there. So yes, it's been positive, but I'm looking for that next leap in innovation, whether that comes from the fintechs, whether that comes from the banks. I think that's essentially what myself and consumers are looking for.
And I think that's a really interesting point to make as well, because like you say, they are all very similar, and the sort of offerings there are similar. So that's super interesting for sure. I guess my next question then to you three would be, is the industry big enough for the both? I guess, let's imagine we're a Western, someone's walked in from out of town to challenge the cowboy. Is the industry big enough for the two of them? Or are they going to continue to exist alongside? Or is someone just going to really sneak up and start to really dominate the industry? Julia, I'm going to ask you that one first.
Yeah, I mean, I definitely think so. I think, as I said at the beginning, there are still so many segments of customers that are underserved by the market today. And so I think you have to believe that, we're not as an industry meeting all of those customer needs today. It isn't a case of kind of naturally competing with each other in direct spaces. A lot of the new fintechs are really focused, they're kind of offering specific groups of customers, specific products. So even if you take Revolut, it's not necessarily competing with everything that Lloyds Banking Group does. It's not trying to. And I think that's important for me. It's, the competition, and I think it's one of the reasons that partnerships are starting to happen more often. The competition between these companies isn't always obvious. There might be areas that overlap, but we're not competing with each other on all things. And so I think you have to believe as a result that there's plenty of space here actually for everybody. And everyone plays a different role. Everyone's after something slightly different. They're targeting different segments. They're offering different products. So I think that's important. Yeah.
And so, Jovi, I guess following on from what you just said about the need for innovation, what do you think on this? Is one going to rise up?
I would hope so. Okay, I would love for that to happen. I guess again, for me, I would love to see a fintech, because I don't believe it will come from an established bank. I think they're just too large, and that they are unable to make that pace of change. But I'm hopeful that either a fintech or one of these big tech companies will start to offer products to consumers that are essentially hyper-personalized to that particular consumer. And I know it's a big thing. There was a Pay 360 last week, and there was a lot of talk about hyper-personalization of financial products to consumers. And I would love, and I think that the fintech that comes in, all guns blazing, that can actually serve a particular segment of consumers with products tailored for that particular demographic, they're the ones that are going to rise up and I think mop the floor with everybody else.
Yeah, that's really interesting. And I think personalization, again, is one of those things that we're hearing a lot about at the moment. And Julia, I'm sure with everything that Chetwood does, that's a huge emphasis for you guys as well. Amber, I'd love to bring you in on this and get your thoughts.
I think the great unbundling of banks is not going to happen overnight. First, as I said, users are sticky. Second, there's the trust and brand names. So if you look at the data, it tells you that 42% or around 43% of the UK digital population has traditional banking accounts. Only 10% has digital accounts. So the trust and the brand name is important when you have a bank account, especially that most of these digital banks have actually EMI licenses rather than banking licenses. And when they have banking licenses, you don't necessarily hear about it that much, and you don't really trust putting, all of your saving or give it to a digital bank. And then the last problem is credit. So these digital banks rarely offer credit lines or rarely offer loans. So I would say until you have loans, you will have this very strong stickiness to traditional banks, which will end complementing the service of traditional banks versus a digital bank. Also, one thing to keep in mind. You can imagine that the big digital banks today could all have banking license and start offering credit, but is it their end game? Some of these banks' end game is not necessarily to do an IPO. Some of them is to get bought out by traditional banks. So in the end, you might end up having maybe 2 or 3 digital banks that will enter the big monopoly of high street banks. But I would say most of fintechs, especially fintechs, not digital banks, most of fintechs will actually end up being bought out by banks and having their services integrated to the offering of the traditional bank.
If I may ask a quick question of Amber, again, that was a very interesting point. This issue surrounding trust and brand recognition and customer stickiness, do you feel that the digital banks, the neobanks, what would it take for them to attain that?
I would say at time, and I mean, first of all, getting a banking license, becoming a bank, because when you hold an EMI license, your funds are not protected. So I would be wary of putting all of my funds in there. If I have my funds with Barclays, I know that I have a recourse. If I have my funds with Revolut, do I really have recourse? So they have a banking license in Lithuania or Estonia, or I can't remember where. So it's slightly difficult. And I think building a brand in banking takes time. And despite what happened in 2008 and everyone hitting on the bank and saying that they are untrustworthy, we still trust our banks. Do we trust PayPal? Do we trust Wise? Do we trust Revolut? Not as much. And I think it would take time, and also maybe when growth starts slowing, because when you're in a very high growth company that is not necessarily profitable, your end game is not really focused on regulation. It's not really focused on compliance, because you need to innovate very quickly. And that is the other side of it's a double-edged sword. Yes, so the banks have very heavy regulation, which makes them move very slowly, but it makes you trust them because you know you have recourse. But the digital banks that can move very quickly offer you very new products that are perhaps not very well tested, don't have the same security than other banks. So I think it would be a balance.
And we did quite a lot of customer research in this area, obviously, because, and you're right, Amber, clearly, particularly for our savings brand, people are on average putting in £40,000 into a fixed term savings rate. The banking license is important, of course, to these customers. They know to check that, they know to go and look you up and make sure that you're a real organisation, and that is part of the process for them, clearly. But actually beyond that, they are very willing to try new entrants. And we found that it wasn't as much of a barrier as we thought it would be. As long as they can see that you are on that FCA register, actually they're quite reassured by that in itself, and so willing to try and willing to invest their money into those products, even though we haven't invested in above the line marketing. We haven't spent money or time, frankly, brand building. What we've said is, let's create really great digital products that are great rates as a result of not having to invest in all of that above the line spend, and let's actually use that to drive take up. And so that was something that we researched into, but then since going live 2-3 years ago, probably on our savings product now, we've really seen come through. So for me, it's quite interesting that you can push some of these boundaries more than perhaps you think you'll be able to, even when, to your point, people are putting in £40,000 of their money. They're actually, because of the segment they are, and because they've done this many times, they actually understand that, the FCA register, that is actually enough to validate that this company has a banking license. So yeah, it's an interesting one, and it's something we are always taking into account when we do our product development.
Thank you, Jovi, for that question prompting that. That was I really enjoyed that. So I guess let's look ahead then. Let's look into the crystal ball to the future. Is the cooperation going to continue? Is the teamwork still going to be there? Or, like we said, are we going to see sort of one segment just go off and do their own thing? What does the future hold for this? Jovi, I'm going to let you go first.
I wish I could see into the future. I'd be a lot richer, I'll tell you that now. But I think that essentially, most, as I mentioned earlier, most fintechs, in my opinion, haven't actually changed or innovated banking since Monzo came on the scene, right? All they've done essentially is simply taken what banks have done badly, made it better, and essentially made payments sexy again. So I think the future is one where we need to start looking at how we can use technology to do what banks could never do before in a way that is far better for customers. I think that collaboration is going to be key, essentially. I think teamwork will continue. I think the big winners in the future are the ones that will emerge in terms of how to partner better into the ecosystem. You're going to see more collaboration. You're going to see better partnerships. And I think you are going to have to see a cooperation of equals as opposed to unequals. I still believe that banks see fintechs as, lesser than, essentially. And until banks and fintechs, until banks can see fintechs as equals and collaborate as such, that is when I believe you're going to see a lot more innovative offerings in the future, essentially.
May I just jump on what you said regarding banks looking at fintechs as lesser? I don't think they look at them as lesser, but let's remember that fintechs are startup, and in a startup you look at one problem, one solution, while banks are, as I said, behemoth with multiple arms and multiple products. And I just want to highlight one thing. I'm not going to use co-opetition, I'm going to use cooperation. And I think cooperation is here to stay. And the proof is all of the big investment banks have incubators and have venture arms. They only incubate and invest in fintechs or in startups that they believe they can integrate into their offering or into their operational processes. So that's a very good indicator that it's here to stay.
Fantastic. And then Julia, what do you think?
Yeah, I think we'll start to see through the banking as a service and software as a service offerings, I think we're going to continue to see much more embedded finance that works for customers in a really smart way. And I think some of that will come through partnerships, as we've talked to, between fintechs and banks, but some of it might also come between, partnerships between banks and retail organizations. And we're talking a lot to a number of people who are really interested actually in using our banking license, using our customer proposition development, using our balance sheet in terms of the credit and pricing risk, actually to be able to offer their customers a better experience. And so I think it's a really interesting shift for the industry, because it isn't just about fintechs and banks anymore. Actually, there's this broader coopetition or cooperation, to Amber's point, that's happening actually across how consumers want to use financial services products. And I think that for me is kind of the interesting piece around the future. Where will that go? Hopefully, to the point we've made, and Jovi made too, hopefully that will drive real product innovation. It will start to create some different products out in the market. But ultimately, it needs to just improve that customer experience. And some of that is as simple as it being seamless and integrated.
If I may add, because that's a very interesting point. Now, we, at Unlimint, we receive multiple inquiries from fintechs. And I always ask them, okay, because they call and say, look, we want to utilize your banking as a service solution. We want to launch this and we want to launch that. Okay, great. But what makes your product so different? What makes your offering so compelling that it's going to drive huge customer adoption and customer rates? And again, I'm going to say the names. I don't hear anything that is that compelling, that is that different, that is that innovative. So I sit there and I think, okay, you can't just say to me you want to be the new Monzo or the next Revolut or the next, whomever that may be. And again, what is that compelling customer proposition, that compelling customer problem that you're trying to solve? And I think banks, again, because I don't see innovation coming from banks. Now, if I'm wrong, then I'll say fantastic. I'm hands up. I can't see innovation coming from banks in this respect. But I do believe that both banks and fintechs and tech companies and social media companies, they understand that right now, the key thing they want to serve and get at is data. Okay, how can they use customer data to offer better customer propositions? And I think that essentially is where innovation is going to come from. That's just my 2 cents.
And one last thing, if I may, because maybe we didn't really make the difference clear. Yes, because we have the digital banks or neobanks, and then we have other fintechs in the RegTech space, in the legal tech space, in the payment space. So we need to be very careful when we're thinking about the neobank. Their growth and business model is quite different than the other fintech, RegTech, legal tech, where indeed you can see a lot of growth going on RegTech, legal tech, and other payment tech, which will end up in my view, being bought out by bigger player, while the digital banks will need to start evolving and start offering multiple products that need to be more and more similar to what banks are offering. So for example, in digital banks now, a lot of them offer you brokerage account, trading brokerage account, or you can trade immediately on app. A lot of them offer you crypto, which definitely you're not going to have on your Barclays account. So there is a little bit of a differentiation. But again, as I mentioned before, in my view, the big difference is going to come when you will start offering credit, because, well, number one, this is where banks make their money, and number two, you will be able to create this stickiness in your users, because if you have a loan with a certain bank, you're going to stay for 30 years or, I don't know, 20 years or 50 years or whatever it is.
Firstly, I just want to say a quick thank you to our online audience for watching. Don't forget you can follow us and follow the conversation with the hashtag Fintech Times co-opetition, and you can follow us on Twitter at the Fintech Times. And thank you so much to my panelists, Amber, Julia, Jovi. It's been an absolute pleasure to talk about this with you today. It's been really insightful. I've enjoyed all of your insights. So thank you so much for joining me, and I hope we hear from you again very soon.
Thanks, Polly.
Thank you for having us.
Thank you for listening to the Fintech Times podcast. We hope you enjoyed the discussion as much as we did. Don't forget to check us out at thefintechtimes.com and subscribe to our monthly publication to keep up to date with all the latest fintech news.